Yes, eventually I moved on to swing trading. I'd done scalping for years. I've made some money. I did it with hedging. I tend to trade for a while, then relax for a while because that fear of missing out on the market, I don't have it. Before, when I was trying other strategies, I always believed it would work. Now I saw something that worked. I wanted to believe it was wrong. You have to track your results. Why did this lose? Why did this win? Best way to find your strategy.
Folks, we welcome Solomon onto the show today, a very well-rounded trader. He scalps, he swing trades, and he even hedges. You're going to find out how he does all that in today's show and his journey to get there. And at the very end, we actually jump into a price chart and you're going to find out what he does and how he sees price play out on the market. So that's at the very end of the interview. So stay tuned, keep watching. Now, later on this week, I do drop another video on the show where I break down my fake out bot, which is an algo that you can actually get your hands on a version of if you go and watch the video. So we've got 5-year back tests and a whole bunch of other stuff. You actually see how the strategy works and what's under the hood as well. So that's all happening here on Trading Nut. Make sure you hit subscribe so you don't miss that. But before we dive into the interview, let's see how I'm getting on my 100k Blue Guardian challenge. Before we dive in, folks, I'm taking my sponsor Blue Guardian's Prop Firm Challenge, the 100k challenge. I've been doing it for a while now. You can see here the chart of last week's trades in front of you. Yes, 43 trades, a lot. So I actually started off at minus 2.6 on the account, and I did bring it back up to almost 3% in profit, and then I had I fell apart and brought it all the way back down to where I started before pulling myself together and getting a couple of wins to end up the week at minus 0.6. So I did grow the account, even though it felt like a losing week for me. The account did grow. Now, if you're looking to take your own Blue Guardian challenge, hey, they got realistic targets, 4 and 8%, and there's no restrictions. They've got the Guardian Protector, which is kind of unique, a huge profit split of 85%, bi-weekly payouts, and their scaling plan takes you up to $2 million. Now, folks, if you do want to take up a Blue Guardian challenge, there's a link in the description with coupon code TradingNut, all one word. You're going to save 10% off at checkout. All right, folks, here we are on Trading Nut. We've got Solomon in the house from Hedging Mastermind, and he's over there in Amsterdam, a 9-year full-time trader. We're about to hear a story. Can't wait. So welcome to the show, Solomon.
Hello.
Hey, so to start off with, we like to find out how you got into trading, how it all started, and then we dive in from there. So how did it all start for you way back then, 9 years ago?
I started in 2012. I just got into university. And there was this company called Plus 500. I don't know, it was Plus 500 or 123. It was white and blue. It wasn't with MetaTrader. They had their own personal software for trading. They were offering free accounts for people to trade. Now, if you get to a certain, for example, if they gave you $100, no, if they gave you $20 and you took it to about $120, right? Then they give you the profit, not the bonus that I used to trade. So I was already interested in trading. I'd seen people do it while I was in high school, but in high school, I just wanted to have fun. But in university, you know, you're a student, you're broke. Everyone needs money because there are always responsibilities, books, you're paying your bills for the first time, you're buying your food for the first time, you're doing everything for the first time, you know, and maybe your parents give you a budget, maybe you don't have a budget, but you have to do that with school. So what was there to lose, right? Now, I noticed if I'm trading with the US dollar and a country on the other side of the world, let's say somewhere in Europe, I noticed early in the morning, because I was in Europe, right? So I travel around and I see that, okay, more people are using the currency of that country. You know, traveling exposes you to something like this. Because I'll explain that later. Traveling allows you to exchange money all the time. So you are doing it on a physical level. You're doing it with different countries, not online. I wasn't doing online. I was doing physical first. So I knew how to, in the morning, is it better to exchange your money? In the evening, is it better to exchange your money? I knew what times of the day, because you can they can open their shop and it's a certain price in the morning. And when you're coming back from school, it's a different price. In the school bus, I always saw this. Now, I started asking myself this question. Instead of just taking advantage of the opportunity, I asked myself, why? You know, because more people are using that currency in that country, right? Because it's the amount of people that are spending. If they are using Turkish lira, Turkish people are using more Turkish lira in their economy at that moment. So it has more buying power because people are actually using it to spend and buy. However, in the US, people are sleeping at night, right? So there will be less use of dollar unless maybe it's like international markets, they are doing transfers for large quantities or whatever. So that let me know and look at trading like Forex anyways, like stocks, right? The currencies are basically the stocks of this country. If the country is doing good, the value of the currency goes up. If it's doing bad, it will go down. If it's not in use, it will go down because it's like supply and demand for the currencies. So yeah, I made the money. I got there. The broker blocked me.
So hang on, you made that, you took your $20 to 120, and
I did it. Yeah. Every day I woke up, I always timed it 8 a.m., 9 a.m. because I always saw a huge spike. So I would buy. I wasn't using the stop loss. I was just, gambling then. I had no strategy. I had no systems. I hadn't learned about anything. I just used what I knew in real life. So I wasn't using any indicators or anything. A certain time between 8 to 9, I would quickly buy. Value went up, boom. It goes up for like 30 minutes, 1 hour. I close, I take profit. So I did it for days consistently. I lost some days, but at the end of the day, I made more profits than the losses because it was always consistent. It's just something I need to do once a day. I don't need to put a strategy, put all my faith in it. I get my answers immediately in just a couple hours. And I didn't even have enough money to buy internet on my phone. So it has to be the trip between my home and I find out if I won in school.
right.
So it was a gruesome trip, but yeah, it worked out. However, the broker didn't pay me. They blocked me instead. That was one of my first bad experiences. So I always kept it in my mind that a broker it doesn't matter if it's onshore or offshore. To me personally, as long as they are paying you out your profits, then they are making money from you taking the trades. That stuck in my mind at that moment. But I wasn't too angry because I wasn't in need of money that, my parents were still providing for me. I was just, because of that comfort, I had the spare time to experiment on things, So most people, when they're comfortable, they don't experiment. They wait till times are bad, and it's harder to experiment when times are bad. So, yeah, I learned something. Eventually, after a year, I went back into trading. Then we had like a bad economy because I live in Holland. However, originally, I'm from a third world country, right? So the economy was getting bad and bad and bad. So my parents, because of the dollar too, again, it's about currencies. The dollar was rising, other currencies were falling, especially if your economy is bad. So the value of what I was getting before couldn't even pay rent. And I was sharing rooms with people, right? So I went back to Forex because I saw someone who was in my class who was actually making like, I never really used to watch videos online and all. Back then there was not really anything online about trading, right? Very few people, I would say maybe 4 or 5 people, you could find them on YouTube, Instagram, but the rest were not really serious. So for the first time I saw someone in my life with $3,000 cash. He wasn't telling me about trading. He was just doing it on his own, right? And he wasn't showing me his results like all these people show results all the time. He was just doing his thing. If I asked him, he would show me, I always saw him doing it, and I saw it in cash. That was when I knew that, okay, this is someone I know, then this thing must be real. Because plus the experience of I've done it before. Just because they didn't pay me out, I stopped. If they paid me out, maybe it would have been a different story. So I went back to trading. Now, I used my experience of, okay, this is real, this is like stocks, started trying out different strategies. I noticed the more I used indicators, the more terrifying it was for me, the more impatient I was. I don't knock anyone using indicators, but I know that they're using it with something else. But if you're using indicators only, indicators is just maths. Everyone's indicator is maths. It's a maths formula. They are checking specific things and giving answers. And for you to have the answer to something, you must already know the 2 plus 2. So that means the markets must have moved already before you get your answer. So it cannot predict the future. It can only tell you what has happened. And they use it in different colors, different patterns. That's when I knew indicators were, they could help you confirm things, but they can't help you predict the future. So yeah, if you put your faith in indicator, you have expectation, right? You expect it to go long. If it says it's going long, you don't, your expectation, and especially if you've seen it work few times, you don't expect it to now go short. And if it goes short, you keep on believing in your indicator, which is a dangerous thing. You can't believe in your indicator because the market can do whatever it wants, whenever it wants.
Did you have a specific indicator that you were using that was
like
giving you these
moving
signals?
averages, Bollinger Bands? There was Ichimoku. I tried it. There was there's something they call like the IML. But I think everyone knows
Everyone
IML.
talks about IML. Yeah.
Yeah. I tried their harmonics, whatever, they were not really trading, but I wanted to trade. That was the thing. The real people who wanted to trade would have left IML from the first week or the first few days, in my opinion, anyways. So I wanted to trade because I wanted to know that, because my issue was I couldn't even get a job. I was staying in a place where you can't get a job. So getting a job wasn't really an option because it wasn't easy, even if it was a low-paying job. So I needed to be sure I know what I'm doing so that I can do it later on. Even if I have to plan, at least I know that I'm planning with something that's sure. I tried and tried and tried for years. I used to start with $30. I used to start with $50. I remember how harsh my heart was beating when I was trading $200 because that was the most money I had. It was like 1 month's rent, and I was sharing an apartment. So I was putting 1 month's rent on the line. And, when I lost part of it, it's all about perspective. $200 is not a lot, but when it's your rent and you actually lose it, and you know that rent is not, it becomes very realistic to you, So I realized if you lose, you lose. There's no praying, there's no begging, you have to be right or you have to be wrong. Another experience was when my friend was buying GBP JPY and I was selling GBP JPY. I didn't know. I was praying for 1 hour. And when I came to school, I met him too. He said he's buying GBP JPY and he's praying for it to go up. So I thought, whose prayer is God going to answer? That's when I also knew that it was kind of futile, So is God not going to like my friend, or is he not going to like me today? Like, what's going on? So I tried and tried and tried for years, and it became a habit. When I wake up, I'm on my PC testing things. When I'm sleeping, I sleep on my PC. Eventually, I gave up after years. However, it's because of the habit, right? I had nothing else to do. I turned it into a habit. They say when you do something for more than 90 days, you can keep on doing it. It becomes a habit. So I had nothing else to do. I was used to putting my Netflix on the side. And because I had a job, I was able to get more funds. I was putting majority of it in trading. I was ready to lose. I just wanted to be sure why I'm losing, okay? So I can stop losing, and why I'm winning so I can increase my wins, right? So nothing else to do. I woke up, I looked at the charts. I've given up. Okay, it's just habit. I move it to the side. Went on with my life. On the fourth day, the third or fourth day, I can't really remember. It clicked to me. It was on the 5 minutes chart. I saw something happen. And a banker explained this to me also some nights before. He works in HSBC. He said, when they want to do like a large transfer, when there's a large transfer going on, right, with companies, let's say in the billions, it usually has, billions can move the market. The market is $1 trillion market. They're not going to destroy the world's economy because somebody is trading 10 million, 100 million, a billion. They're not going to go 2,000 pips on Monday, 80 pips on Tuesday, 200 pips on Wednesday, 5,000. It will destroy the world's economy. They are playing with countries' currency because some people are trading Forex. So that didn't make sense. So they had to have a pattern. So that's why you have like average daily range. You have pairs that have 100 pips, 100 pips. Let's say it goes up a bit by 10 pips or it goes down a bit but it has its consistency. That's what allows you to trade within that region for that day and allows the economy to flow also. It allows you as a trader to be able to trade and allows the economy to flow also.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
So he said, let me get back to the story. He said, the market shows a spike, right? Even if it's just for a short while, even if it's because billions is a lot, right? It affects the markets just a bit. And they notice that and they buy also in millions. Maybe it goes up a tiny percentage, but they make a huge amount because they are using millions to make maybe just 100,000 or 200,000, just like that. So I kept that in mind. I removed all the indicators and I noticed the less indicators I have. At one point, I had like 10 indicators. I was reducing it, got to 5, got to 3, got to 1. The less I had, the more confident I was in the charts. I removed the grids. I started looking at things like, okay, how do you spend your money? You have $1, you have your $5, you have your $10, you have your $20. Every currency has its full stop. Every currency has its banknotes. So what does that mean about price? It has its bank levels. You look at USD JPY, you can see 180, you can see 180.5, you can see 190. Even between, you can see 180.25. When I started drawing this, I removed the grids and I started seeing a pattern. It's easier for you to read the charts when you are looking at the prices, the real world currency hitting specific prices. Let's look at gold today. I don't know if I can share my screen. Gold hits 2030 and then spiked all the way down to 2000. It's not a coincidence. The price is moving, the currency that we're trading is moving according to the prices. So if you're looking at all these things and you're looking at the average daily range, most people, let's say they buy, right? And it starts selling, they start panicking, they start closing their account. But if you knew that it was only going to go down for about 60 pips, then probably bounce back, you could have waited. It's all a game of patience, right? So going back to what the banker said, I saw this pattern. I couldn't believe it because before, when I was trying other strategies, I always believed it would work. Now I saw something that worked. I wanted to believe it was wrong. I don't know why. I checked it again. I checked it back 3 years. It followed the same pattern. It always came back to that price when something happened. Okay, but I didn't have an exit strategy then, right? So I tested it and tested it and tested it for 2 weeks and 3 weeks. It didn't fail. I was like, what is going on? So for 1 year, I worked and saved all through. All through that year, I was practicing, saving, practicing. The more I practiced, the more confident I was in what I was saving, having a plan. I saved up to about 3,000, It was a lot back then, but I was so used to losing that the fear of losing, the moment I put it in my account, I wasn't coming with the expected, oh, I don't want to lose my funds. I was just there I know what will happen if it goes bad. I was ready to accept that, but I wanted to prove it. Because if I'm right, I can use this for life. 3,000 will be nothing compared to what I can use it for. Even if I'm making $100 a month, every month, for years. Let me just know if I'm correct or I'm not correct. I took it to 3,000. I made about almost $9,000 profit in 1 month, right? But I was scalping, right? Going for 3 pips, scalping. I could have 5 to sometimes 30 opportunities a day on one pair. It was USD JPY. It was one of the best with my assistant, right? And I noticed I've met a lot of people who have made money and then disappeared. So most of the time, I noticed most of what they were trading was gold and USD JPY. So most of what I was practicing was on gold and USD JPY. Why not focus on, because if this is what they are using, let me use it, at least to get
because they were disappearing, yeah? So these guys would go, oh, yeah, I'm doing really well, and then all of a sudden you never hear from them
they
again.
would drop gems, and then they would invest their funds and then they would disappear.
Yeah. So you're sort of basically saying they're disappearing because they've cracked it and they're not telling anyone they've cracked it. Is that your sort of theory?
They disappeared because they've done all the investments they want to do, and trading is an option at that point. It's not a necessity. It's
Right.
not like,
Okay. Yeah. So
you
they've
know,
got it. Yeah.
yeah.
They've done well out of it, basically.
Yes, so they
Right.
can choose when they want to trade. Some of them eventually came back, but a lot of them that had good information didn't come back. They kept it to themselves, maybe leave the family, you know,
Yeah.
retired, not retired, but I'll say like retired from the social life. So, because some people, they don't want to be public, right? Some people, they want to be public. It's different personalities, and we'll come to personalities when it comes to trading also. So I found it, then I realized I don't have an exit strategy because I had to be truthful to myself, because truth in trading is what brought me to this point where I'm seeing profits. But how can I keep these profits? I know how to do this for a while because I wasn't using an exit. And then I realized the markets can do whatever it wants, whenever it wants. That rule ran back to my mind. So I lost about 2K from that experience because I just had to cut the loss. I just had to accept it at that point, right? Foolproof strategy, but without an exit strategy, is it really a foolproof strategy? You know, you can make a lot of profits, but one time can cut it short. Then I started focusing on hedging. Another story in time. I watched the videos. They're not, even till now, there are not a lot of videos on hedging. What I mostly see is when the market goes up quickly, most people panic buy. Why? Because they don't know if it's going long. They have no assurance. They don't know how long it's going to keep on going long, and they don't know if it will come back down. So you have a lot of fear when you're not assured of what is going on. You don't know what is going on. Sometimes the market can spike randomly. It can be because of transfers. It can be because of war. It can be because of the economy. It can be because of rumors, even rumors, you know. So the market can do whatever it wants, whenever it wants. So you should not go in saying, oh, I'm going to go long, so the market is going to. Always have an open mind of what if it goes against me. If you're not planning of what if it goes against me, you will have a terrible experience. You know, you can have a bad experience, but then there's a terrible experience. You know, so okay, I lost funds, time to go into hedging. Most of what people were doing was they'll buy with one, they'll sell with two, they'll buy with four, they'll sell with eight. In case the market is going up and down. I did that too, you know, so you learn from experience. But I did that with, you know, part of the profit I made. Okay, now I've made profits. I'm ready to risk some on learning something else to at least save these funds for later on. I know how to make the funds. It's time to keep the funds. I invested it back again. Because some people, what they do is they make profits, they withdraw everything. They think it's going to be consistent. They think it's going to be, 10,000 every month. No, the economy is not the same every month. So how do you expect it's just like when you put your money in stocks. How do you expect the same return every month? This month may be 3,000 pips. Next month may be 2,500. So if the pips are varying every month, how do you expect to, each month has its different returns. Some can be a lot, some can be small. But if you are hedging, right, even if you lose nine, if you lose nine, if you have 10 trades, you lose 9, right, and use a stop loss, your account is wiped out. But if you have 10 trades, you lose 9, you hedge them out properly, and you have 1 winning trade. You keep your capital and you keep a little bit of profit. So to me, that was the best exit strategy. There will be nothing better than that. Because even if you have a winning, you can't plan your winning ratio. It varies also. If you say it's 80%, it's probably between 75 to 90. It will go up and down. It has a range, just like the markets. So you don't know when you're going to have your bad week. You don't know when you're going to have your good week. But as long as you keep on trading with your high percentage, your high risk to reward ratio, you always come out on top, right? So if you have if you're using stop loss and you have that may not be bad. But if you don't, if you just want to go with a free mind, knowing that whatever happens in the markets, you're always safe, hedging was it. I saw someone on YouTube. There was only one person that was really serious about it. However, it was too chaotic for me with my personality, because I know my personality. Everyone has to know their personality and what works for them. It will be best for you in terms of your psychology. You don't have to copy exactly what everyone is using. You can use the same instructions, but how you apply it should be based on your personality. So using buy one, sell two, buy four, sell eight had major problems, because if that is happening, that means the market is consolidating, right? And if you don't have your price levels, because when the market is consolidating, it's consolidating between prices. If you don't have your price levels, you will not be able to notice that it's consolidating between prices. For example, USD JPY may be consolidating between 180 and 182. But if you are not placing your price levels, you won't see that. It will just be random lines to you. So if you are trying to hedge in a consolidation, your margin is going to give out. It's going to explode, right? Most people don't know that because they are not checking what is on their trading screen. Because 90 to 95% of what you need, MetaTrader has provided it for you. Indicators are just an extra touch, like a sprinkle. So most people are focusing on the sprinkle. They are not focusing on the information, the
Price chart,
information.
the candles, yeah.
So on your information box, you see your balance, you see your margin, you see your equity, you see your free margin, and you see your margin percentage level. When you are hedging, this gets affected. If you are not watching it, if no one ever told you to look at this, you will just be hedging, thinking you can do this forever, and boom, it blows your account. I experienced that, so I knew that wasn't a working system. First of all, I had to understand, where is the market going? Because if you are hedging, direction is important. If you know that it's going long, you don't have to risk so much. For example, you don't have to buy with one, sell with two. You can maybe buy with one, sell with 1.5, because you know that, okay, it's going to keep on going down for a long period of time. And if you know your levels, okay, it can go as low as this for today. It can go as low as this for this week. It can go as low as this for, you can plan ahead, right? You lower your risk, because when you're hedging, you have risk, right? And then again, now, if you get hedging, you know that you're going to make profit at the end of the month. You don't need to over leverage your account. You can use small lot sizes, right? You know you're going to end up in profit at the end of the month. So why not use smaller lot sizes? Why not lower the risk on your account? If you are hedging, you lower the risk also. So for me, it was about using hedging and lowering every single risk. Someone who uses such a large lot size is doing that because they are trying to make as much money, because they are trying to fight that loss, you know. But then again, high risk equals high reward, low risk equals low reward. But low reward with hedging is more consistent. That's the way I see it anyways. So that has been my trading journey. So in terms of YouTube, after a while, I started uploading my videos, right? I wasn't doing any courses. I wasn't doing any signals. I was just uploading it for almost a year. Then people started asking for courses. People started asking for signals. I wasn't even speaking on my videos. I was just uploading it. After like almost a year, I started speaking. Then I started doing video like maybe 3 years later, uploading more videos, uploading more vlogs. Now I'll be uploading more. Like, share, and subscribe, by the way, to hedgingmastermind.com. To Hedging Mastermind YouTube channel. And join the Telegram group. We're up over 5,000 members. I just started the Telegram group. I should have started it a while. Well, I'm trying to get to 10,000 to 15,000 members by the end of the year. I think it will be possible. There are a lot of fake accounts, but if you go to my channel, you should see the real Telegram group there. So eventually I started meeting students, especially during the COVID period. So what I do is I trade live in front of them. I put like my account. I take live scalp trades with them. I take live hedging with them. When I meet my students in person, I'm able to see them. Then I can see their personality, right? Because some of them, they love scalping, right? However, does scalping give you better results than when you're swing trading? Because you can hedge with both systems, right? Scalping gives you a lot of profits faster than swing trading, guaranteed. However, are you doing it because you like it? Then you shouldn't be doing that. You should focus on what is giving you more profits. If you like Euro USD, but USD JPY is giving you more profits, trade USD JPY. It's not about what you like. It's about what is giving you the best returns. It's giving you the best results, right? So you have to fight that urge to go with your emotions when you're trading. In your normal daily life, you can have emotions, play, laugh, but when you are trading, you have to be realistic. You have to keep your bias to yourself. You did your analysis, it said long. You already have you have your emotional bias. You have it's like being at a game, a sports game, and you're at home. So because you did the analysis, you favor it more. But the market doesn't know you. The market doesn't care about you. The market doesn't care about your $100 account. Market doesn't care about your 1,000. Even if you have 1 million, 10 million, the market doesn't know you or care about you. All the brokers are sharing the same live feed. They are giving you the same price. Even TradingView is giving you see trader, everyone is. So if you say the broker is cheating you, that means all the brokers in the world, plus the exchange like xe.com, plus TradingView went against you. So you have to stop all those ridiculous emotional responses and be about what is going on the charts. And the best way to do that is to be able to see the charts. The indicator is blocking you from seeing the charts. So you are not focusing on the charts, you are focusing on the indicator. That's why I made the software also. So what my software does is it does the analysis without bias. So if the software does the analysis and says it's long, right? I can have my own bias. This is based on technical. I have technical analysis and I have fundamental. My software does only technical. If it's long, it will tell me it's long. And it will tell me both short term and long term. If it's short, it will tell me it is short. Both short term and long term. It will show me how high it can go that week, how low it can go that week. It will show me, and it's using based on averages, right? It's maths calculation. So it's not helping me to predict the future. It's not helping me to trade. It's just helping me to give non-biased analysis. Okay, so I don't know if I can share my screen.
We'll jump into a little chat share video later on where you can walk through all that sort of stuff. Now, I did want to ask a question around, so you do the hedging, but you also do swing trading as well?
Yes, eventually I moved on to swing trading when I became more comfortable, right? I'd done scalping for years. I've made some money. I did it with hedging. So everything was kind of secure. I could slow down. So that's why you notice on my channel also, I tend to trade for a while, then relax for a while. Because that fear of missing out on the market, I don't have it. I know I can come back and do the same thing. So I get a little bit comfortable. That's why I have a team working with me now, because if it's just me on my own, you don't really get that comfortable.
Can you remember a time when you, I suppose, really sort of had a big growth within your accounts that you were trading, and you were like, man, I've definitely cracked this thing?
For me, it's all about calculation. So if I could do it on a small account, it's basically the same on a big account. I just have to increase the calculation to the account size. So I didn't really, for me, it was, when I knew I cracked, it wasn't the financial size, it was the consistency. I'm doing this, I've been doing this, and I'm still doing it. And those kind of thoughts of, oh, don't let me, because we all have like superstitious thoughts also, we're all humans. Don't let me show someone my trade. Maybe it goes bad after I show someone. The results are the same.
Yeah.
Doesn't matter what you do. Oh, let me pray about it. If it's going bad, it will go bad. All this kind of, it gave me more assurance. How
long did you take it? Did it take you to go from like I say, I'm using this approach to consistency? What was that consistency level for you? I.e., how long did you trade for without, and were able to grow an account? I suppose I'm trying to work out, like, was it a week? Was it a month? Was it 5 months?
You remember what I said before? I cracked it already. Then I saved. I used 1 year to save.
Yeah.
During that 1 year, I was practicing. The more I saw it work, the more confident I got. Because when I started saving, I had that fear of, oh, I'm going to lose this money. Then it started getting more comfortable. When you see the results, it gives you more confidence because it gives you more assurance. It's like learning to drive. Right? You're scared the first time you go on the highway, but the more times you do it, after a while, you don't think about it. You just zoom into the highway. So it's about seeing the results. And doing it for 1 year made me more confident.
And so how do you manage your accounts? Because I watched a video that you had before where you're taking I think $2,500 account to over 100K. Do you
Yeah.
just trade one account, or do you move it across multiple accounts? How do you sort of manage things?
Okay. When I started, I had people give me money. People that I've met in person. They gave me money to trade because they saw my results. So when I traded for them, that's when I was able to move more into swing trading, because some people wanted lower risk. They didn't want all those fast-paced trading for their accounts. So yeah. I forgot the question.
The question was, like, how many accounts how do you manage your accounts? Are you trading one account or
Yeah.
multiple accounts?
Yeah. So when it comes to scalping, on smaller accounts, I do more of scalping, right? Because I can go more high risk. I have less to fear, right? I have less to fear. It's a small account. I can go more high risk. I can start with large lot sizes. However, hedging using large lot sizes on a small account makes the hedging sequence more gruesome. For example, normally I would hedge out in a day, right? It makes it longer because you have larger lot sizes, you have less space to move in. So you want to take it at vital points, and you have to be ready for what to happen if it doesn't go your way also. So it's very calculated. You have to put more time and effort into it. When you are trading with a larger account, you can have 100K accounts. 10% on a large account is 10K. So I have less need to take trades all the time. I have less needs to increase my lot size. I can just go slow and steady. So it made me realize that the secret to trading comfortably is having a large account, right, and making small profits. It helps also with the psychology. Smaller accounts, with my personality, I go scalping. Larger accounts, I go swing trading. And I also look at risk also. With everything, I'm looking at risk. How much am I going to risk per trade? This helps me know what lot size I'm going to use. So everything is calculation. I turned everything into maths formula, because with maths, you can't go wrong. 2 plus 2 is always 4. You take it back, it's 2 plus 2. So, yeah.
And so what about, like, if you had to put a number on the number of like MT4, MT5 accounts, whatever you use, that you're using at the moment, or trading actively at the moment, what's that number?
Privately, I have a scalp account. I have one swing account. I have that's privately. I live stream the swing account on my channel. I've taken some profits from the account. Then I have a private scalp account. Once in a while, I get a private scalp account. I grow it very, very large. I grew and I uploaded almost every video the last time that I did it. I grew it up to over 90K. I've made some withdrawals. I made some extra withdrawals again. I withdrew it up to about 10,000 right now, because I'm going to start scalping the account again. I'm going to start uploading again. So I'll upload majority of the videos. And when I do that, I journal this. I show everyone every stage, every step. However, I don't explain, because that's what I teach. However, if you want to test it, I do give free signals for about 3 months. You can test it for 3 months. I used to do a copy trade account, a PAM account, and I would take about 5%, 10% of each profit made every month. You can take 90 to 95%. You won't get large results like with the scalping. You'll get a few percentage. It's to show you that the system works. The exit strategy will be hedging, so you know that you're not going to lose any funds. You can ask anyone who has connected to my account for the PAM. They didn't lose funds. They made some profits. They saw the system worked. They were able to withdraw their funds at the end of the month, because PAM is usually every month. So I give a lot of free trials. Sometimes I live stream. I don't live stream consistently. I know some people live stream consistently, but I think I'm too lazy for that. I have to have someone set that up for me. Well, I live stream, I do analysis, I show everything. I show what I would do if I was using a stop loss. I show what I would, because when you're using a stop loss, your entries are different. You have to give yourself the most advantage, right? When you're hedging, you can do early entries. So I give both examples, both explanations. Everything is publicly on YouTube.
And how many trades would you take in like a day? It sounds like there's a lot.
Not really. When I take my swing trades, they run for some days. Every time for example, if I know that it's going to go long for a whole week, right? Because you have to be right on only once, right? If you're right, it goes long for that whole week. As is going on, I have specific targets. For example, if I use 5 lot size or if I use 10 lot size, if it gets to a specific price target, I take some percentage of the profit, maybe 2.5, maybe 3.5, because most people don't know that you can take part of your profits. So you take part of your profit, you don't always have to take the full profits. And then I move the exits, maybe to break even. So then I've taken some profits from the markets. That's always a smart thing to do. Take your profits, withdraw your capital. Okay, use the market's money to trade. It reduces the tension. It reduces the pressure also. It helps with psychology. So yeah, I take some profits, 25%, hits another target. I take another 25%, hits another target. Worst case scenario is comes down, spikes down, because I always keep this in mind. The market can do whatever it wants, whenever it wants. It can spike down, clear everything out. But I didn't waste my time. I took some profits, took advantage of the situation.
Now, you did mention earlier on about sort of, the mindset side of things and getting your mind in the right headspace and that. What's your sort of advice to traders out there who are struggling with that kind of thing?
You have to be honest with yourself. You have to be honest with your results. Are you getting results? You look at your results and that should give you the simple answer. No matter how you're trying to put it in your mind, are you ending the month with results every month? No, it doesn't even have to be every month. Just at least 1 month. Look at results, and if you can be honest with yourself, then you can dive into why am I losing, right? Because if you know why you are losing, and this is why I like to focus on not fundamentals, technicals, right? Because technicals is always the truth, right? If it hits a specific price, it hits that specific price. So with technicals, I look at it and say, okay, was it long? Was it short? Why did I lose? I bought and the market went short. I wouldn't argue with it. Next time I would learn. How can I close early? I know why I'm losing. I'm reducing the losses. I'm learning from it because I'm being honest with my results. Now I won. Was it a mistake? Was I lucky? Did I actually, let's say I wanted to buy and I clicked sell. Did I plan to do that or did I actually do that? Because if I know the truth of this, I can know how to do it again. So for me, I always say technicals first, then fundamentals. I'll rather be screwed by technicals because I can find my footstep back than be screwed by fundamentals first. Because fundamentals is not specific.
Yeah, so basically it's if look at the data that's coming back to you to understand, I suppose your mentality and your mindset around what you're doing. Because if the data matches up with, if you think it's going to go long and you enter a long, great. If you think it's going to go long and you enter a short, then you're not matching up there. Okay, we're going to dive into some quick fire questions here and then wrap this baby up. So to start off with, how long did it take you to go from newbie to consistently profitable?
That goes back to I practiced, I had years where I was trying to get the system. I would say I was a newbie then. And once I found the system, I had 1 year to practice because that was my period of saving money. I was having a plan because once you have a system that works, then you can plan. If you are not sure of things, you can't make an accurate, straightforward plan. So it's always inconsistent. So I was a newbie during those years. When I got live, when I started making profits consistently, then I would say I was increasing in my level. It took me years to get to where I am, right? Because you can see it happen for 1 month. You saw it happen, it increased your confidence, but your confidence is always increasing years by years. I would say fully a full-time trader, professional, I would say around after 3 years. 3 years.
Okay.
Then I could literally, I could go against the market just to prove a point. That's the kind of level, trading against the market.
What's your favorite entry setup?
What do you mean?
Well, just like when you're going to take your first entry on a hedging position, what's the favorite one that you'd like to go? This is my best. Like, I know this is going to work out.
Oh, yeah. What currency do I like to hedge the most or the best for me? I would say USD pairs. USD pairs are usually more consistent with their trends. You know, some other pairs like GBP, if you trade GBP, GBP spikes a lot. GBP USD, GBP JPY, people trade it, yes, but it spikes a lot. And when you are hedging, you don't really, you want to avoid spikes. You know, you want to avoid spikes. You want to go with a consistent trend, a consistent flow. USD JPY, if it's consolidating, you can see it. It's clear as day, does it for a long time. If it's trending, you can see it. It's clear as day. Even if it has little pullbacks, you know, which some people think it's a rejection of support and resistance. I don't even use support and resistance. I think it's rejection of support. It's usually rejection of price. If you have your bank levels drawn, you would be able to see this instead of trading empty charts. And yeah.
Now, the final question is, if you could leave our listeners with one piece of advice, what would it be?
Remove your indicators. Let the charts tell you what to do. Let the chart show you what is going on. Don't depend on your indicators to tell you the trend. Look at the price. If the price is going down, the trend is down. If the price is going up, it's up. And yeah, you have to be honest with your results. Just that. You don't even have to have my strategy. From there, you can pick on. From there, you can be able to tell what works and what doesn't work. If you're actually honest with your results, you have to track your results. Why did this lose? Why did this win? Best way to find your strategy.
Now, before we wrap up, what's the best way for traders to get hold of you?
Telegram. I used to use WhatsApp before, but you know, it got hacked. WhatsApp can get hacked at any random moment or closed down at any random moment. I did a Google search after mine was shut down and realized that. But I use Telegram now. You can also send me an email. Instagram also. I have an Instagram account, Hedging Mastermind. I have a Telegram channel, Hedging Mastermind Group. There are a lot of fake Telegram channels. So it's Hedging Mastermind Group. And I have a YouTube channel, Hedging Mastermind. So you type Hedging Mastermind anywhere, you probably see me.
All right, well, look, what we'll do, folks, is we'll hook that up in the show notes, and to find them, all you need to do is search for Solomon in the search box on tradingnut.com, or in fact, there'll be a link underneath this video or in the podcast description. Thank you for listening and watching. Until next time, listeners, trading happiness and success.
All right, so as you can see on my screen, I have my, first of all, you can see a lot of lines. Some say trend, some say average weekly high, some say average daily range. You know, it's just my software doing analysis. So what my software does, it doesn't trade for you. It does the analysis for you. It looks at only technicals. So it is doing the analysis without bias, because when some people do the analysis, they have bias. Maybe it's their favorite pair. Maybe they like taking buys. Maybe they like taking sells. So they would have their bias towards the market, and the market doesn't care about your opinion. The market will do whatever it wants, whenever it wants, however it wants. My software was showing me long-term, the trend was bearish. Short-term also, the trend was bearish. As you can see with the arrows, it's pointing down. It's always going in real time with every single tick of the market, not pip, tick. If you know what a tick is smaller than a pip. It's every random shift in the market. The software takes that data, feeds it, and does calculation and looks at what is going on in the market. So with this, I always know when the trend will change. For example, with the spike that has gone down, right? If I'm looking at my software, I can say that around let me see, because I want to be sure. So around, 2030, right? Then I'll have technical reasons to believe that gold is bullish. So price has to go all the way there. Once I know the trend, now I know the trend, I can look for an entry, a safe entry. I know the trend, so I'm going to look for buys if we're on the buy trend. Now we're on a sell trend. So what would I look for? Sells, sell entries. The point at which the trend will change is always moving in real time also. So for example, the trend was going to change around 2030, but earlier this morning, right, the trend was much more higher. I can't rewind, so you can't see that, but if you're using the software, you should see it in real time also. It was much more higher. We knew the trend was bearish, and the exit was, I have to draw this so you have a visual representation of what we're looking at. the market was pulling back, okay? And the market pulls back for a reason. I explained this to my students. I can give you a hint. Once the daily range is filled, right? Because some people don't know when to stop trading. It's not about New York session. It's not about London session. It's not about Asian session. Sorry. The market is given a certain amount of pips to use every day, right? So if during London session, it has used up all its pips, it's done for that day. It's not going to keep on moving again. It's like a bottle that is full. So with this daily range, I know nothing is going to happen again at the end of the day. So what is going to happen? You have pullback, right? The market doesn't have volume to push through. It can't just increase the daily range because it wants you to blow your account. It can't just reduce the daily range. It follows rules. Next day, we have our pullback, which is a good entry for us because it lowers our risk. We put our exit, right? And we know how low is going to go for that day, which was around 2000. Okay, boom. Because of news, it can go lower, which is around the end of the week, right? So if I'm looking at gold, I'm saying, okay, gold has reached the amount of pips it can move for this week. So most of this week, I'm going to expect maybe consolidation. The market will pull back. It has triggered so many people to take sales. Everyone will be selling gold right now. Very predictable. What is the market going to do? It's done for the day. It's done for the week. It's just going to consolidate a bit, pull back a bit. Now it has time for the traders who don't know what is happening. It can trigger their accounts, spike their accounts, play games with them. It will fool them into taking buys, then go into sales. It will fool them into taking sales, go into buys, especially during those consolidation period. Because a lot of people tend to come into the markets during that consolidation period thinking they found the holy grail. Oh, I just buy here, sell here. But when it leaves the consolidation and you have no exit, boom, you know, you're messed up, you're screwed. So we targeted all the way down to 2000, which was here, which it went way past there, and filled up for the week. And that's what happens during news. Trading high news like CPI, trading high news like NFP, I wouldn't really encourage it. It's usually done out of desperation. Okay, me personally, I don't trade news. If I'm in profits, I tend to get out of the markets. That's my personal decision. Or I tend to take some profits and move my stock to break even because I don't want to think I am almighty. I always have to look at it like, oh, what if it goes against me? Plan for loss as you are planning to win also. It will give you a better psychology long term. So now we know how high is going to go for that day. We set our exits there. The market opened, spiked all the way up, then spiked all the way back down. Took some profits, let the rest go. Plain and simple. And I already know what to expect next. If I'm looking at another pair, it's the same simple strategy. No matter what pair you go to, the software will do the analysis. It will tell you the trend. Once you know the trend, it's accurate with technical reasons. You see where the trend will change because some people are always panicking once it spikes back. If it spikes back, I know where, even if it spikes back all the way to 2025, I won't still buy. They are tempting you to take buys. They are tempting you to take sales. That is the job of the market. It is your job to know what is the temptation and what is really going on. So things like that, you see them all the time. The market was going in a consolidation for quite a while. If you look at it based on price levels, we are looking at, let's see, what price is this? We are looking at between 2060. And this is why I always encourage put your bank levels. It has been consolidating between 2060 to around 2000. Okay, finally we can see a break out of 2000. If you don't have your price levels, you won't be able to track these things. You will just see the market as randomly, oh, it's going up and it's going up and down with a pattern. You can see in the consolidation, push down, push up, push down, push up, push down. Very simple things that you can read with very little effort by simply just looking at the charts. Instead of using indicators will not help you. You're using it to block you're using indicators to block the main action. This chart right here is the main action.
And can I ask a question around the when you were hedging, have you hedged any area of this chart, or were you hedging it earlier on? Because I know the hedging is a big part of what you do. Was there a
Okay.
hedging area that you like? If you could identify that, maybe you can go back further in time if you need to.
Yes. So with gold, if I wanted to take this trade, right, we didn't have much space, right? So I have to draw it again. So I put a visual representation, right? The high of the day at that time before news came out was around somewhere here. I'll just put it in yellow. Let me make it more clear. It was around here, right? I took my trade. Let's boom, set it, and I put it way above the high of the day because I'm thinking about being cautious. It can spike all the way. If it hits the high of the day, it's filled like a bottle, and it's going to be hard for it to continue to push through. So I put it above that. Now, that is for someone using a stop. Same thing I would do if I was using hedging. I would hedge from there also. I have more specific things that I would use to hedge, but in general, this is what I can show. I will hedge where I know the trend is going to change, which was the change of trend. I'll put it in green. The change of trend was going to be above the high of the day, right? So that means it had to break the high of the day, right? It had to go really, really extreme for it to then change trend, which is going to be very difficult for it to do, right? So the high of the day, boom. Once I know that the trend has changed, then I would start taking my hedge. Something like this, because there's no more space for the market to continue to go, right? I won't get my trade hedged out that day. Maybe the next day, maybe the next 2 days, right? Because you need the trend, which we now know, and then you need space to hedge out the trade. Because what is hedging? Hedging is making profits to cover loss. So let's say I was selling with 1 and I'm buying with 1.5. That means I have 1 selling, 1 buying. The loss is not going to increase. And I have 0.5 extra making profit. Now, it is still that 0.5 makes enough profits. Let's say I'm in $100 loss. 0.5 just needs to go for 20 pips to give me back my $100 profit. And boom, it evens out. I close both the profit and the loss at the same time. Now, there are cases where, because you never know when consolidation is going to come, it's random. That's why you always have to have your bank levels. If you are seeing it's bouncing between prices, between the first and second bounce, you should already know it's a consolidation. As long as you have your bank levels, it's visually right there in front of you. If you're in a consolidation, you don't hedge. There's no point. It's just going to blow your account. You simply hold and you wait till the market moves. No one is forcing you to hedge at that moment. You know what is going on. Your job is to react to the markets, not to trade, then expect the market to react to you. You don't control the market. The market does what it wants. You follow. You are the sheep of the market. The market is the herd. You don't fight the market. You don't beat the market. You understand what the market is doing and you follow it. It is better to be on the side of the market than to be against the markets. You know, you are not Spartacus. You are not Hercules. You know, so you find the trend, knowing when the trend has changed and knowing the trend is a very key and vital point. It reduces a lot of confusion. So it's more in-depth than that, but I think it's one of the best hedging videos you can find online.
So there you have it, folks. Interview done and dusted and the chart breakdown. And remember, we've got that fake out bot that I'm dropping the video on later on this week. You can actually get yourself a copy of a version of that. So please head over there to Trading Nut, hit subscribe, hit like and that notifications bell on the YouTube channel so you don't miss it. All right, folks, have a great trading week and we'll see you in the next one.